Okay, greetings everyone. So, um, the next update on here, I'm just doing an update. What I said would happen here. So, we left off on the date here for November 1. I said that this is the risk area, and if the price goes into here, you should not trade, and it's going to become less valuable to hit this target as time goes on. Um, Definitely, if you're in this area, it's a risk. It's a risk zone or a no trade zone, which means that there was a buy here, but when it crossed here, that means that you should have stopped out. You should have exited, and I said that there were a few things that could happen, and either it would instantly go up and hit this target, or it would spend most of its time in this area. Thereby, it would not be a trade, or it would be under this and hit this, but this was less. This was less likely. Um, So it turns out that it did spend a lot of time in this midsection, this risk no trade midsection. Then it ended up using the longer term resistance line as a as a as a resistance line. This longer term standard deviation as a or trend line as a resistance line, and that provided the hardcore resistance on the no trade zone itself, and provided the momentum to get onto the other side of the no trade zone, and then proceed in that direction towards the target, one of the other longer term trend lines. So as you can see, these are shorter term trend lines. This one is a shorter term trend line, and you can also tell by the thickness. So the more thick it is, the more longer term that trend line is. So you can see what it did today. It's on the most on the biggest trend. It bounced off that and used that momentum to break under the no trade zone completely and towards the other longer term trend line. So that essentially was no trade, but we can definitely see the momentum in this in that activity, in that action. Um, so, all right. So this is what the next day looks like. It's going to look something like this, and obviously, as you see, I don't have any targets. I don't have any lines providing targets on the lower side here, so it could slip under that. If it does, it would just be a free ride down into an unknown target. Could be an ADR, average daily range, or something, or whatever other support target you have. Um, and but the stop out would be these lines here. So this is, you can see this cross section here, uh, where this is a risk zone, no trading zone, falls under here in this price. That's an entry. Just let it fall into how much ever it can make, unless it crosses over the no trading zone again. In that case, it would be a stop out or a stop in reverse, and the reverse would be, the target would be for buying would be this right here, this top right here. And I don't think that the price, as far as the range, will be going much higher than this ceiling here, this resistance. So I would not worry about it crossing in up into this area here. Yeah, if it does, there's another target up here, but this is out of range. You can see this is out of the price range. So naturally, the price should be heading upward. It seems that most of the longer term trends are above the current price. So the current price is undervalued right now. It's at a low. It's at a discount. So it should be trying to head to a higher premium anyway, soon anyway. So that's what we got here. The best looking thing looks like something like this, using this as the stop out. You buy on this side. This is the trading zone, the buy zone. And in that case, if the price hits up here, you'd have a stop of 25 pips and a target of about 47, about 50. So that's 2-to-1 reward to risk. And that's what I will look for. So this is the stop zone. This is the buy zone here. If it falls under here, then this is just a free fall sell. And then this becomes the stop loss cross section